Well, when we first acquired Greenstone, our first 60%, we loved the asset then. It was always a goal of the company to try to increase our position to 100%. And there's a number of reasons for that. First and foremost, Greenstone is a world-class asset. Large deposit, top-tier mining jurisdiction, multi-million ounce reserve, over 400,000 ounces of gold per year in its production profile. These types of assets are very, very rare and very, very valuable. And for a company of our size to be able to acquire 100% of an asset like Greenstone, that's a real accomplishment, I think, for Equinox Gold. In addition to that, it increases our production profile, decreases our overall cash costs, and that mine will generate substantial cash flow for the company. At 60%, it was great. At 100%, it's fantastic. We did acquire the additional 40% of Greenstone with debt and equity. And we did that because that mix we thought and felt was the best option for our shareholders of Equinox Gold. Greenstone itself will generate a substantial amount of free cash flow. And so with that free cash flow coming on, as Greenstone ramps up to commercial production and into full capacity, we'll be using that cash flow to pay down our debt. And we've got both a revolving credit facility and a term loan that we took out to buy Greenstone. Any excess free cash flow that we're going to make over the next few years, we can park on our revolving credit facility. That reduces our overall leverage. It also reduces our interest costs. Basically, for every dollar we park on that facility, we're saving 9 cents, for the company. So basically, reduce leverage with free cash flow from Greenstone over the next few years. We're through the big capital at Greenstone, so this gives us a great opportunity to do that, especially at these historically high gold prices. Across our whole portfolio of assets at Equinox, we've always focused our exploration capital on near mine exploration such that we can replace reserves, increase the mine life, or increase our resources to eventually replace those reserves. In terms of return on investment, that's the best bang for the buck at Equinox. At all of our deposits, we own large land positions around those mines. So whether it's near mine or in the district, that's really where we focus our exploration dollars. In the last couple of years, we've put a lot of effort into our Bahia complex, which is kind of the ground between Santa Luz and our Fazenda mines down in Bahia, Brazil. Around our Aurizona mine as well, we're just developing our new Tatajuba open pit. We're going to be going underground later this year. All of that is based on near mine exploration work that we've done over the last couple of years. Now with Greenstone coming on, we've acquired a very large gold trend over 100 kilometers going west from the Greenstone mine. We've got near mine deposits, we've got deposits along that trend, and we've got a fairly large underground deposit at Greenstone. So again, in that jurisdiction, we'll first focus on near mine exploration opportunities to increase the reserves and resources around the mine, and then we'll also look further afield at perhaps some more greenfield type of exploration along that trend. Portfolio optimization has been a big focus of Equinox Gold over the last couple of years. And what I mean by that is both decreasing our costs and making our mines more efficient, and whether that's increasing production or decreasing costs sort of through the way we mine and produce gold. Through 2022, we saw quite a bit of inflation. We've also built this company quite quickly through acquisition and development. And now we're in a process where we're integrating asset optimization as part of the culture of the company. We call it our AOP program. Eventually, this will morph into a kind of a continuous improvement group within the company. But the goal is to look for ways to reduce costs through, purchasing efficiencies, inventory management, operating efficiencies, anywhere where we can kind of improve the overall execution of mining and producing gold. That's what that group's been doing, and that's really been a focus over the last couple of years. And we've been able to save tens of millions of dollars in costs since we've implemented this program. We've always had that target of 1 million ounces of gold production per year as kind of our goal or our vision for the company. Nothing special about 1 million ounces, more of an indicator of scale. It could be a little higher, a little lower. Absolutely Greenstone and especially this acquisition of the remaining 40% That's 400,000 ounces of gold per year. That takes us quite close to that 1,000,000 ounces of gold per year. So we've come a long way over the last 5 years. Within our existing portfolio, though, we do have opportunities to continue to increase our production profile. Probably the next one we'll be working on is at our Aurizona mine. We're going to be building a portal later this year, starting to go underground, build out that deposit. That would increase the average grade at Aurizona, which would have an increase in our annual production, but also in the mine life at Aurizona. We also have our Castle Mountain mine in California, and we're in the process of permitting an expansion at Castle Mountain that would increase production there to over 200,000 ounces of gold per year. We're working toward having that permit in 2026, and so post a construction decision, we'd be producing at that higher level sometime in late 2027, 2028. And then we also have an expansion plan at our Los Filos mine to build a CIP plant there, which would basically include a mill in addition to the heap leach operation that's already at Los Filos. That would have the effect of getting much, much higher recoveries from the higher grade underground ore at Los Filos, and also from the higher grade ore that we get as the pits get deeper at Los Filos. So between those three projects, that would, and Greenstone, that would take us north of 1,000,000 ounces a year of production from within our existing portfolio.